Well, good morning, everyone. Welcome back to our trading room. It's Monday morning. Of course, everybody knows about those horrible events that happened in Paris just a few days ago. People have been asking me how I think it's going to affect the markets. Well, it's always hard to say when something that horrific happens in the world, whether people will pull all their money out of the stock market and run toward precious metals or put the money under their mattress or do whatever. But I don't think the market is acting too unpredictably, actually. We'll take a look here. Well, here we'll start with the Raptor. You can see the NQ is still in a decline for the most part. There was a little bit of a rally here in the overnight, but for the most part, the NQ is still falling off, but I don't think that has anything to do with what's been going on in Paris of late. That's just the market's been in a decline for the better part of last week, or at least the last 2 or 3 days. It looks like here on the Raptor we're trying to make a little bit of a bottom right now. It looks like, to me anyways, the market's more or less sideways. I'm not going to get too anxious here right out of the gate. We'll give the market a few minutes, let the dust settle a little bit. Good morning, Jim. Jim giving me some advanced decline numbers here, saying that we've got 930 on the buy and just under 1200 on the sell, so slightly bearish flavor on the morning. Which we would expect with that little bit of a opening gap, ever so slight opening gap. The market left off at around 4,500 last week, so you can see we're just hovering below those numbers right now. Okay, crude oil also sort of sideways. Here's crude oil now on the Falcon. Again, the market ran up a little bit in the overnight, came straight down. This is odd that we didn't produce a signal, a trend change signal back here. Just made a slow, steady progression. It looks like this bar here was trying to give us a trend change signal, but didn't happen until way down here. Now, the signal still would have hit our profit objective. It's just when you get a signal that produces that low, it's always the problem is, where am I going to cover this trade? Fortunately, the hawk did give us a comparable signal, so obviously it was something that showed up in the scalping, not so much in the swing trader, however. But right now we're back near the lows, and it appears as though the market's pretty content where it is here at around 40.70 a barrel. Possible trend change signal here in the Falcon. First micro macro cross in the hawk. The signal has since tripped. No, there they go. They're not going to give me a second chance to get in there. And I was going to show you here on the Raptor, we're getting a cloud crossover also. So when the cloud crosses over like this, we tend to look for some sort of support. And there's our signal. Let's see if we can get a second push on this one. Big problem here too. Where do we cover the trade, right? But let me, come back here. So this is still very early, looking for a second push on this. I would have liked to get in on the hash mark here. I'm concerned that the market's going to try to flounder a little bit as it tries to press towards, well, I guess the overnight highs up here around 45.15, 45.18. And here comes that swing. Looking for some cloud crossover support now. Come on, get up there. All right, we're just about to hit the break even in our first target. See, this is what I mean. If I had my stop or my entry on the hash mark, I would have hit my profit objective and my break even trigger by now. Okay, so we hit the break even trigger, and looks like we're gonna try to find the highs, the overnight highs. Let's take a look here at our support and resistance suite. So we're going to have some resistance here at the 45.09 line. And if we get through there, 45.29, that's going to be very aggressive. So we'll see here what happens around 45.09. You can see we had a nice trend change signal here on the Falcon also. And in hindsight, we can see that this was our test of the extreme right here. Even though it doesn't look like it, that's what it was. Now, the test of the extreme normally looks like this, where it comes up short. But in this case, we broke it, but just by a few ticks. Every once in a while, you'll actually see the test of the extreme either get down to the lows or maybe just dip a little bit below the lows and then rally. I suppose this is why they say that trading sometimes is more of an art than a science, because if the test of the extreme came up short every single time, of course it would be, well, it would be something you could say, this is what a test of the extreme is, and it must be this way always. But occasionally, it will just hit the lows, react, and then head higher. So definitely something that you need to be aware of. And if you're unsure, of course, you can always dial the risk amount back too, right? Instead of taking the full amount, you can go in with perhaps a limited risk exposure. Can we still cover it down there? No, we can't. So we could do it maybe below the support line. No, we can't do that either. Okay, well, it looks like on the Falcon it would have been all or nothing. But that's why we use the trade manager anyhow to control our risk exposure. So no problem hitting that first target. And you can see we've hit the primary, did a little bounce there, late filter entry signal here on the Falcon. So we actually got two chances to get into this trade. And now it looks like it's going to try to get up here to this next resistance line. That would be our next target. So good morning so far. Oh, it looks like I got tagged on that little bit of a retracement there. Well, that's all right. That's still a profitable trade. I'll take it. Nice way to start the day. The hawk here also coming through. First micro macro cross signal, macro pullback signal. So a couple of great opportunities here on the hawk as well. Wow, are those really the advanced decline numbers, Jim? They changed so fast. We've got almost 1,800 on the buy now and 900 on the sell. So that is a huge, huge reversal in the bias on the advanced decline. All right, crude oil also pressing a little higher. Gold hitting the skids at the moment. Here's gold on the Falcon. And you can see we're just kind of moving sideways here for about the last 20 minutes or so. Gold had been trending lower this morning. So here was gold's open, a trend change signal right out of the open. Nice little move lower there, followed by a late filter entry signal. And that also ended up moving lower. Back now to the primary resistance. That seems to be what's holding the market down, and we're stuck here between the primary resistance and the median line. But our trend line keeps waffling, our filter keeps waffling, so no real signal there at the moment. Yeah, the Raptor cloud getting a little extended here. Jim says the cloud to cloud, I'm assuming on the YM, is 53 ticks. So it's getting a little bit broad. That does tend to show you, in this case, an overbought condition. And we may see the market retrace a little bit, get back into that hard edge. We're actually producing a soft edge sell here. And I'll demo this for you. What we'll do is see if I can get it in at the hash mark. Okay. So the idea behind the soft edge sell is when the band gets really wide like this, we're going to look for the market to retrace back to the hard edge. Now, this is a counter trend signal. So you need to be aware if you're going to try to do these soft edge sells or soft edge buys, that there's a chance the market's going to move against you. The key is to see some sort of test to the extreme up here, where the market tests, seems to fail, and then it's producing a signal. Now, very often this is also the type of signal you more or less want to be all in, all out. I know Jim takes his a little earlier. He'll start shorting way up here. I'm looking for the signal, and you can see the market fudged my signal a little bit here, but nonetheless, the problem with the counter trend trade, of course, is that it makes it impossible for you to get the with trend signal should this develop into a double pullback into the hard edge. It will come out, produce a buy signal, and if we're stuck selling, well, then we're stuck on the wrong side of the trade. Now, I guess what I should do too is I should get a stop in play here. Because this is counter trend, you're always better off trying to cover above a swing high or low. You know, I've said it before, but your stop loss is really just your safety net. It's the point where you say, yes, I am wrong about this trade. It's time to go. So we've encountered some resistance here off of the primary. The other reason you want to cover above the highs, of course, is you're going to see a test of the extreme before you get a possible failure. Oh, the buyers, just watching the Geiger counter here, the buyers seem to have it in hand. Yeah, I think we're going to see them run the highs. So here's the problem. We're getting a hard edge bounce signal. I can't take it, right? I can't take it because I'm short. Yeah, see how that Geiger counter is hard over? Yeah, no real surprise there. And, it's kind of reinforces that point that I've say from time to time too, is that if I have a winning trade in one direction, in this case we've had a winning trade to the buy side, I'm going to avoid sell signals, at least until I get proper market structure, the market telling me, yeah, we're definitely topping, we're definitely going to turn over. Until that happens, I'll stick with the bulls today. But that's the perk, I guess, of being a trade room moderator. I can show you why some things work and why some things don't work. Okay, crude oil flip-flopping a bit here, but this is crude oil now on the Eagle. We're going to be entering trend mode in almost 20 minutes time. We're getting a hard edge bounce. This is very much, a very V-type top. And not very much of a test of the extreme. However, if we get down below these lows, or at least get in sync with the ATR, I think we're going to, believe it or not, I can't believe I'm saying this, see crude oil head lower still. Well, maybe low enough to test the 40-20 area. That's just something to keep in mind. I'm not going to get too overly aggressive. $40 a barrel for crude, my goodness. I don't think it's been $40 a barrel since I was a kid. And look at this, the whole, this is a good exercise too. This is something that you can do when on your own. See by how much the market breaks or makes a false breakout. That's how much extra you need to have your stop back. So let's say we had our stop at that line instead of here. We wouldn't have been stopped yet. Well, what's the significance of that? Well, once we see the market swing, then we can start rolling our stop. Right? We can start rolling our stop in. We would have been stopped here. It still would have been a losing trade because we shorted from here, but it would have reduced the risk exposure somewhat. Now we're seeing all kinds of tests and retests. market getting a little bit weaker, and let's go now back to the crude oil chart, where this bar right here that's forming, once it closes, it will turn the ATR over. So you could actually plan to short below there. Now, these lows here at this 40-47 area are going to be substantial. So, oops, I can't take it like that. So you have to know your risk going into this. This is a very risky trade, and if I can even frame it, there we go. This is very much a high risk trade, folks. So I'm pointing it out to you, but it isn't one that I would be too anxious to jump on just at the moment. The reason being, I know you're asking, well, Eric, why? What's different about that one? Well, let's take a look here at the Falcon. The Falcon not in sync, still a real mess. And the Hawk is the same deal. So here's the Hawk on crude oil. See a lot of yellow bars, a lot of sideways action, no real follow through one way or the other. We had a first micro macro cross here. Yes, it did hit our profit objective, but just barely. And then up she goes. So the market, it's just not in sync, just not very clean. It's not to say crude prices won't head lower. It's just that the signal, not as high a quality signal as we might like to see. All right, the NQ, speaking of messy signals, here's the NQ back into the hard edge now. First micro macro cross signal here, but even on our Hawk up here, we got starting to get a lot of sideways action. Oh, look at this. We did get a couple red bar buys, so that does suggest that the buyers are running out of steam, and we should see a move lower. There's the first micro macro cross. It has just hit our profit objective. So a nice little trade there. And had I been really conservative with my stops here, just let them alone, we could have even got this trade to a break-even position. Imagine that. Managing stops, no question, a difficult exercise. The NQ here trying to get some structure. We'll probably see a little bit of a bounce here still. I'm thinking because we may get another retest here, maybe a macro pullback. We are into the hard edge on the Eagle and the Raptor, and we know that we normally get a retest when those things happen. Yeah, Tony says a couple more weeks and they'll be paying us to take a crude oil contract. Yeah, it's like the negative interest rates that they're threatening at the banks. Oh, you mean the bank's going to pay me to borrow money? The bank's going to pay me to have a mortgage? I don't think so. The crude oil trade actually falling a little harder than I anticipated. We just got through the lows here, not quite to the break-even trigger yet. I will leave the break-even trigger in play. It looks like we're getting the reaction to this area now. So the lows here at 40.20, the market's starting to flinch a little bit. If the sellers take it over here, I don't anticipate too much more of a reaction as we get closer to the 40.20 area. And of course, it's crude oil, so, don't be afraid to take the profit when you have it. That's the best way to ensure a winning trade. If you have open profit, take it. Nothing wrong with that. Okay, I'm going to let the NQ sort itself out here for a moment. I'm going to go grab myself something to drink. I will be right back, but kind of keep an eye here on this trend change signal that's going on in the Falcon and perhaps another cloud crossover here in the Raptor. Those are the two that I'm paying attention to, and a possible macro pullback here. All right, I'll be right back. Okay, I'm back. Oh, look at this. We did get a late filter entry signal here on the Falcon. Our macro pullback signal got spoiled, and we're working on a rule of three signal now with the Eagle. So there's a couple opportunities. These yellow bars are bothersome. All right, first micro macro cross. I keep telling you what a reliable signal it is. So we'll set up for that, and we'll set up for this rule of three if it doesn't run away on me, which it's trying to do. See, the rule of three, this one a little bit tougher to distinguish. It's looking like we've had the test of the extreme right here, but normally what we see is, another little retest, something like this, and then the market starts to fail, and then it comes down and it produces our sell signal somewhere near these lows, and then that gives us that opportunity to short. Now this rule of three didn't have this little spike through here, but it's still a rule of three, and it does look as though we did get a bit of a top. So you would look to sell here or below this swing low. Either or, it's only a couple ticks difference. Try to cover the trade as far back as you can. And crude oil is making some progress actually. Here to the short side, we've hit our break-even trigger. So that's a good start. Put that away. And it looks like our rule of three signal also going to work out. We've hit our target here on the first micro macro cross. Hold on a second here. I got to start recording some of these trades. The market's running away on me here. Okay, so that was 45.04 we sold here. So this was, again, our first micro macro cross. I covered the trade up here above the swing high. A nice little move lower. This is the nice thing about the hawk, of course, is that you have the tighter profit target, but you can transfer those tighter profit targets to your other tools if you're trading the Falcon or even the Eagle for that matter. A profit is a profit. It's your money, folks. If you have open profit, by all means, take it. So now it looks like we're going to get that macro pullback signal, and unless it gets into yellow bars, we may get something tradable there. And the market may choose to try to retest those highs yet one more time. Even though we look at these charts and we set up our trade and we think this is a big stop, really it's not. This is a heartbeat in the market, the blink of an eye. We're talking 14 points. What's 14 points in the NQ? That's nothing. It ran 14 points right here. That's why That's why you need as much money as possible in order to trade. You know, you want to be able to, let's just find a good example here. You want to be able to take a signal like this and cover up here. But unfortunately, given my account size, let's see if I tried to risk 3%, which is still reasonable. There you go. Now, you know, 400 bucks, that's dear to me. But again, $400 in the NQ, that's nothing. Look at how the market absorbs that kind of range right there. Just nothing. Here in a matter of minutes, boom, $400. So try to keep those kinds of things in mind when you're structuring your trades. Even though it's a lot of money to you, and I appreciate it, it's not a lot of money to the market. You got to try to stay out of harm's way the best you can. And, you know, case in point, the Raptor trade here this morning. In hindsight, I can see several things that I would like to have done differently. First off, I had my stop here. I should have kept my stop maybe closer to the overnight high. Oh, actually, I guess it was. So it had to be even above the overnight high. And how I told you after this second swing, I could start rolling my stop. No. You know, even after that second swing, had I been able to ride it out, I needed to leave the stop alone in order to actually get into a profitable position because my entry was back here. But the charts are good teachers. You know, if you take the time to look at your chart, see how the market behaves, see how it handles tests of the extreme, see how it handles trend lines. I'm going to punch out of the crude oil trade, folks. If you're following me on the crude oil one, crude oil starting to show signs of support. You got a couple $100 in open profit. You may want to consider taking that. And of course, this is why they always tell you don't trade with money you cannot afford to lose. Don't trade the mortgage money. Don't trade your grocery money. Gold's still very, very sideways this morning. Nothing going on in crude oil, or pardon me, in the gold market. And the NASDAQ not giving a whole lot of clues where it wants to go either. All right, they're going to call my bluff here. The Falcon working on a late trend or a late filter entry signal. We did get a trend change signal right here. Oh, now the late filter entry is breaking apart. So we'll put that away. The Eagle probably giving us the best summary, where we're getting, you can really see the sideways congestion here on the Eagle. Right? We've got highs up here, we've got lows down here. Not quite sure what to make of it at the moment. Possible green bar sell. And getting a little bit of follow through on that. Well, it does appear as though the sellers are going to give it another go. No, spoke too soon. So definitely range bound. Our band dead flat here on the Eagle and the Raptor. Our trend line waffling back and forth on the Falcon, and our hawk starting to look a little bit like a Mexican flag. All the different colors in there, so it's, the market's happy where it is. So Jim says he's watching the YM here. And he bought the YM here on the retracement. Nice little rally, retested the highs. And then I think we're going to see the sellers try to step in again. Oh, all kinds of mixed up signals coming our way now. Yeah, well, don't know what to tell you right now. We're just kind of waiting. Do. Sorry, I know you're wondering what I'm doing. I'm just snooping around to see if there's anything going on, but no, gold is sideways. Crude making a little bit of a retracement, but we're flat. And I'm curious to see what the NQ is going to do when it gets back to these highs. You know, in hindsight, while I was looking away, we did get this first micro-macro cross signal. That would have been worth trying because you could probably cover it down there. You could have scalped a quick little trade there. In hindsight, we've got the red bar buy signal and the test of the extreme, but honestly, when this one was unfolding, it was still a little bit too difficult to really get a handle on. Although it looks like it would have worked or at least got to your break-even target. We'll see what happens though as they encounter this whole 445.20 area again. And that's, like Jim says, we got quite the opening range here. So we're right back up at the opening range. Saw the market retrace all of that. Nice. I'm sure that was a nice move for you, Jim. Good call. And now we're back into this resistance zone that sent the market lower just about a half an hour ago. Okay, a macro pullback at the highs. The thing with the macro pullback is the structure, right? Where are we going to cover this trade? So I'll look at taking the second macro pullback signal and perhaps risking it to here. And you know what? I'm going to even dial down the risk amount just because we're near the highs. I'm not quite sure if I'm going to take a hit, I don't want it to be huge, obviously. And if we look at the overall, we're still, like I say, in very much a sideways type pattern. And perhaps getting a late filter entry signal here on the Falcon also. Now, we're just getting the warning dot. We know the filter is out of sync. Here's the signal. The filter is still out of sync, but I can tell with my logic counter that if the bar finishes right there, the filter will be in sync. So that's where I want to place my order. And actually, this is another trade where I would dial down the risk amount. It's already just hopped past my entry, but we're going to pretend. So I take my entry here. I'm going to try to risk it as low as I can, probably below the primary support. Doggone it, can't do it. Oops. How far back can I go? Yeah, so risking 1% of my capital, that's about the extent of the trade right there. And well, we would have hit our break-even trigger. Come on, don't leave me hanging. Oh, you stinkers. Don't tell me. And there we would have been tagged at break-even. I do believe our scalp signal did find the profit objective. Yes, it did. So our second macro pullback signal. And it's not that there was anything wrong with the first one. You could have taken the first one also. The structure had me a little bit concerned. So when the market was waffling a little bit here, I knew we were either going to produce another second macro pullback signal or it was going to drift into yellow bars, after which I wouldn't need to worry about it anyhow. So let me just make a note of this here. into yet another macro pullback signal. Now we know the market tends to only give us a couple of macro pullback signals within a trend. So I wouldn't be as keen to take the second one. It's now drifting into a red bar buy. The market still owes us a test of the extreme here on the hawk. The NQ definitely trying to rally, no question about that. We're back into the hard edge. So this is odd. You know, we had a little bit of a blow off here. Fair amount of volume on that bar. Not a whole lot in the recovery department. Well, we might be stuck on our hands for a little bit here, folks. Just until we see things shape up some. I would anticipate some sort of reaction now that we're into the hard edge here. But overall, we've had a good morning, so I wouldn't want to spoil it with a so-so type signal. Wow, the NQ falling much sharper than I thought. Big, big move lower here. But I think we're starting to see some support if I shoot a trend line here across the lows. Kind of in that neighborhood now. Remember too, trend lines are not an exact science. They show you regions, areas where the market might be a little bit more sensitive. Okay, class, here's the first micro macro cross. Do I want to take it? And if I do take it, where am I going to cover the trade? Anybody? Take a moment, take a look here. Am I interested in this first micro macro cross? Jim's not too keen on it. Anybody else want to play before I give you my 2 cents? Jim says he'd be more interested in a macro pullback type signal. Try to short it as it retraced up here. Yeah, way to go, Kerry. Kerry says he's not too interested because he'd have to cover it too far away. That's what I was getting at, or trying to get at with this, is let me dial my risk back to the 2%. But here's the problem with this trade. It's not that there's anything wrong with the first micro macro cross. It's a high probability signal. You should consider it. But here's the problem. Where do I cover the position? Ideally, I want to cover it up here. Fundamentally, this is the best place to cover the trade, but I can't afford it. Trade manager says, nope, sorry, Eric. If you're going to take the trade like that, it's going to be out of reach. So where else do I cover the position? Well, the crest in the macro line is always a good spot. The idea is that if the market is going to make a retracement against you, then that's as good a place as any to allow you to ride out the trade and maybe manage your stops to a position where if you're going to get stopped out, you're not going to get tagged for the full amount, but you still give the trade some staying power. So yes, well done, Kerry. That's what I was looking for. Was it's not necessarily that there's anything wrong with the signal. It's a high probability signal. We know that, but where do I cover it? So the market brings you in, and now you start taking a little heat. Here's the macro pullback. Right? We're getting the trend line out of sync, signifying the macro pullback. And we would have hit our break-even trigger and now been tapped at break-even. We did get another chance to enter another trade, though, on the macro pullback. But yeah, difficult signal. There you go. You would have just hit your profit objective if you didn't get tagged at break-even first, which I would have been. I'm not going to be one of these guys that says, oh yeah, I really wouldn't have taken that signal because because in hindsight it didn't work out. Yeah, you gotta learn to think in terms of probabilities. What is the probability that the trade will work out? Forget the risk-reward ratio. The trade manager will take care of your risk exposure. And now we're just kind of waffling again. So there was a little hit and run style trade in there, but not really much to work with. It seems like most of the trading is going on. You know, if you kind of take a look at this morning's range, you ignore the low because that, when did that low print? Oh yes, sorry. Right out of the open, we had that initial little rally, but it looks like most of the range for the day has been confined to this region right here. Right, so the market's very content, it seems, between 45 and 45.20. And we're hovering right in the middle of all that again. We're at the 45.10 point, more or less. Gold still trekking sideways. So here's gold now on, well, let's take a look at gold on the hawk. It's really going to show you the sideways congestion. And look at how long it's taking for these bars to form. There's just no impetus in the gold market. After this morning's decline. But again, that's nothing new because gold has been falling off for the last week. So no real surprise there. Okay, and things are slow. Carrie asks a great question here. Excuse me, I had a little coughing fit. 1 second, I need a drink of water. Okay. Okay, great question here from Carrie. Carrie says, it seems like a lot of time my percentage of profitable trades is high. Today it's 75%. But my average losing trade is twice what my average winning trade is. So I don't end up with much profit. What can I do to change that? Age-old problem, Carrie. And, you know, 90% of the people who come to me for coaching have the exact same issue. And the issue actually stems back to overtrading. What you're doing is you're trading too much, right? Every time you take a position, whether it be a high probability signal or not, we really don't know. Like for instance, here's the Falcon. All right, here's the Falcon. We're producing a late filter entry signal. We know it's a high probability trade. Now I need to set up to take this trade. Let's say these stops look a little tight, so I choose to risk it up here. Oops. Let's do this. I choose to risk it up here. Okay, so we're routinely making $100 on a trade. If I lose, I'm going to lose $300. So I'm essentially going to lose 3 profitable trades, which is exactly what you're saying the issue is. The only way around that issue is to control how many times you trade. Remember, trading is not so much about frequency as it is about capitalizing on your opportunities. Now, if you're trading with a small account, it's just going to be a fact of life that you're not going to be able to capitalize as well as somebody who is trading a larger account. If you've been following the charts for any time at all, there's going to be some setups that look really, really juicy. You're either going to know it intuitively or you're going to know it from experience that one setup is going to be better than the other. Is it because we've had a test of the extreme? Is it because we're trading, off of whatever, off of a trend line or something like that? Some situations are going to, like I said, instinctively you're going to recognize that that's a better setup, or from your experience, you're going to know that that's a better setup. So those are the opportunities that you want to capitalize on. The mistake that most people make is that they think they're still thinking, in the non-trading world where doing more equates to more money. And in trading, the exact opposite may be the case. You may do more, and not only will you not earn as much money, but you could actually end up losing money by doing more. So I always encourage people to do less. We've all heard less is more. Well, that's probably more true in trading than anything else. So your job as a trader, and I'm not sure whether you have the full DTS system or whether you're trading the Raptor, but let's just say we'll pick on the Falcon. You need to be able to distinguish which signal is better than another. And a great way to do it is just to grab your chart, scroll it back, and play like the right hand game, the right edge game. And say, okay, here's a signal. Do I take it? And, be honest with yourself. And I just reminded myself that I said we were going to go through the Profit Finder. This is what you do with the Profit Finder tool, is you work your way through the chart and you ask yourself quite honestly, am I going to take this signal? But you can play it even without the Profit Finder and just keep track of your results and, play it ahead bar by bar and say, okay, would I have taken this trade? If I did, how am I going to manage my position? And I see Carrie's already typed in here. That makes sense. I've taken 12 trades today. Yeah, see, Tony says good information here too. He says our friend in Colorado, and who shall rename nameless, had that same issue when he was trying to establish a winning combine with fully funded traders. Traded too much and the drawdowns kept killing him. And it's so true. My best days have been when I take 3 or maybe 4 trades. And even if you take, let's say you take 3 trades. 3 trades is a favorite number for me. I always tell people, they ask me, well, how do you know how many trades to take in a day? And I tell them, take a quarter, flip a quarter, see how many times you can flip heads in a row. That's how many times you should trade in a day. Now, I've had mathletes take exception to my logic, and we've had some discussions on it, but I still believe that you're better off taking fewer trades banking your profit when you have it. Like, take a look at your first 3 trades today, Carrie, just as an example, as an exercise for yourselves. Where would you have been had you stopped after 3 trades? Chances are, if you had 3 winners in a row, you probably would be sitting okay today. So let's say you took, and I know I pick on the hawk here a lot, but we're just going to pick the hawk because we know these first micro-macro cross signals are high probability signals. So there's 1, there's 2, and here's 3. Okay, so after the open, about 45 minutes after the open, we had 3 signals. All 3 were winners. All 3 earned at least $50 per contract. So now the question becomes, how many contracts can you afford to trade? If you're trading a small account, you're probably only going to be able to trade 1 contract, maybe 2. So that would mean you would have earned anywhere from $150 to $300 today. Had you stopped trading at that point, you are $300 better off today than you were yesterday. Yes, it's not exactly a living wage, but if you're trading a $10,000 account, that's not really enough to earn a living from your trading anyhow. If you're trading a $10,000 account, your mindset should be build your account to the point where you can trade for a living. Or if it's your vacation account, then great, you've just put $300 towards your vacation. Or if it's, fix up the house account, then great, you've just bought yourself a new kitchen sink, right? So that's the kind of mindset you need to have. Now, if you're trading a larger account, let's say you're trading a $25,000 or $30,000 account, you very likely could have taken 3 or maybe even 4 contracts here. So now all of a sudden you're making $150 or $200 per trade, 3 trades. You made maybe $600. Well, okay, that's a lot better, isn't it? Now you're getting into that neighborhood where, yeah, okay, I might $600. If I made $600 a day, that's certainly a living wage. See, that's the kind of mindset you need, and that keeps you from chasing lesser quality signals, which is probably where your losers originated. I'm guessing that you took a signal that was less than favorable, and then the market turned around and gave you a little bit of a spank. Yeah, see, like Jim's got a reasonable target. He's just looking for $400 a day. There's nothing wrong with that. That's a very reasonable target. But if you're, and I'm a firm believer in having a trade quota, for example, like 3 trades a day. You do want to finish profitable. So let's say you took 2 trades and you made your $50, and we'll just stay with $50 because it's an easy sum. So you made your $50 per contract, and then let's say your 3rd trade you took a loser and you lost $150, or we'll say $200 because it's easier math. So now you've taken your 3 trades, you've reached your 3 trade quota, but you're $100, you're down $100. So you would like to finish in the black, so you take a 4th trade. And now we're not chasing trades. If you don't get a quality signal, you're not going to take it. But you take your 4th trade, let's say you make your $50 on that. Okay, you're still $50 in the hole, so you look for a 5th trade. Let's say you make the 5th trade, you make another $50, now you're at break even. Now you need to look for a 6th trade. Now you may not get 6 decent signals in a day, and you need to recognize that. You may end up finishing the day at break even, which is still better than having a losing day. You may not have made your profit objective, but you did not lose any money either. So you need to temper all this with what the market is offering. Remember, you cannot make the market give you money. All you can do as a trader, and this is your job description as a trader, is to take what the market is giving you. If the market's not giving you anything, you can't take anything. Yeah, like Jim says, the key is to do it every day. And I like his comment too here. He says, break even to me is a profitable day. Exactly. If you make break even, and our triggers are usually break even +1, so at least the broker gets covered. Some of your exchange fees might get covered. If you're not out of pocket, it's a good day. Because every time you enter the fray, there is a chance your trade will be a loser. I know I'm not telling you anything you don't know, but capital preservation is really what distinguishes the winning traders from the losing traders. And I know you've heard this all before, but I really like the Paul Tudor Jones once gave an interview for PBS, I think. And it was back in the 80s, I think. If you do a search, you may still be able to find it online somewhere, Paul Tudor Jones PBS interview. It's worth watching. Not worth watching because they don't tell you anything about his entry system. It almost seems like he's flying by the seat of his pants, this cowboy trader. You watch the video and I think he's the stereotype of what most people envision a day trader to be. But you watch him when he's in a trade, and now mind you, the man is trading for millions of dollars, which are not his own. He's trading other people's money, so there's huge stress involved, to be sure. But he's a wreck. His legs are fidgeting. He can't sit still because there's a huge amount of money on the line, and he's trying to get a handle on what prices are going to do next. But he makes a comment during the video that has always kind of stuck with me. It struck me when I first heard it. And the essence of it is, if traders spent 90% of their time focusing on their risk instead of the pie in the sky profits, they would all be more successful traders. So focusing on your risk means controlling your risk, giving your trade a chance, and not over trading. That's a very good question though, Kerry. Thanks for asking it, because the market's been a little bit slow here and it's kept me from doing something silly. See, now here's a red bar buy. What do we do with that? See, the red bar buy normally comes at the end of a trend. In this case, we would anticipate the end of an uptrend, but there hasn't really been much of an uptrend, has there? In fact, the market still seems to be trending sideways like this. About the only clue we had that it was going to head lower was that the market came lower before it entered this consolidation period. Then the red bar buy fails. But otherwise, there wasn't really any clue there that that signal was going to fail on us. And now here we are with another first micro-macro cross signal. We do get a chance for a second push on this one. And again, the probabilities of the signal are good. We need to cover it way, way back though. Try to give ourselves as much staying power as we can. And we're getting a little long in the tooth here. It's near the top of the hour. Yeah, Tony makes a good comment too. Uh, uh, Another way to maximize your trading is to get up early and trade the London Open for an hour, then to trade the US Open. The Europeans, here, we'll let that trade simmer for a moment. Let's take a look here at the Falcon. The Europeans tend to be very civilized with their trading. And by that I mean there tend to be fewer false breakouts. Once the market commits to a trend, it usually stays with it, at least for a little bit of a period. Here you can see near the European Open, we had a late filter entry signal that had some decent follow through to it. Then we're flip-flopping a little bit. We get a trend change signal, and then the market moves lower. One of our uh, poster child traders, he used to work nights before he started trading, so for him to stay up all night is nothing. He trades the European session um, because of that. He prefers to stay up all night, trade the European session. But like I said, he used to work night shifts anyhow, so it's not that much of a change for him. I do know another trader, another poster child trader, who actually moved to the Ukraine, which may not be such a great place to be right now. I haven't touched base with him for a long time to see if he moved. I imagine he probably did, but the reason he moved to the Ukraine was um, the time zone in the Ukraine allows him to trade both the North American session and the European session. I guess it's just that part of the world where you can do that type of thing. Jim asks, do they have high frequency trading in the London or in the European session? Yes, absolutely they do. But they don't seem to be as crazy as the North American session. You see, I don't think it's the high frequency traders in the North American markets that cause them to go all uncommitted. I think it's, well, I have no proof for this. I've always suspected it's the doctors and lawyers, and no offense to the doctors and lawyers in the room, but the doctors and lawyers who want to get out of being doctors and lawyers and, throw in orders on breakouts just enough to send the market a little bit higher, only to have it tank and move lower. I think traders recognize, like the big traders recognize it's easier to fool traders in the North American market. But no, their high frequency trading and algo trading and all that sort of stuff is just as common in Europe as it is in North America. But the effects don't seem to be as bad. Let's take a look at the Raptor in the overnight. So here's a cloud crossover. London opens. Nice little progression higher. Market flounders a little bit. Another cloud crossover. A sell signal. Market heads lower. And you can do this on your own. You can snoop back in the history of your chart just to see how the European session behaves versus the North American session. The euro is also a good instrument if you're going to go that route. That's the 6E, and we'll pull that up just before we close things up for the morning. And the euro dollar, a nice market to follow if you're going to be watching the European time zone. Last night, actually a little bit uncommitted after me telling you how nice the European sessions work. Well, this is on the Eagle as well, mind you. So rule of 3 signal here about an hour before the North American Open. Let's get here into the London session. Okay, this is a little bit more typical. So London opens, it picks a direction and it stays with it. This would have been from a couple of days ago, or I guess last week. Same thing, London opens, it hums and haws for about an hour, hour and a half. Rule of 3, picks a direction and falls off. And again, it's not that you need a whole lot of those signals. You just need one solid signal or 2 solid signals a day that you can capitalize on. All right, you guys, we're going to close up shop. I will see you again tomorrow morning. If you are trading the rest of the session, I don't know, we're certainly stuck sideways. I would give the nod to the sellers, but just barely. All right, we'll talk to you tomorrow. Have yourselves a good day. Bye for now.